This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Portfolio investors were small buyers of crude oil and distillates last week, but overall their positions have not changed in the last 3 months as concerns about the health of the global economy offset lean inventories. Hedge funds and other money managers purchased the equivalent of 25 million barrels in the 6 most important petroleum futures and options contracts over the 7 days ending on June 20th. The combined position was 346 million barrels, 12th percentile for all weeks since 2013, which was essentially unchanged from 350 million barrels on March 28 after the eruption of the U.S. regional banking crisis.
Things have been topsy-turvy lately on the roadsides of West African nations where cheap contraband petrol from Nigeria has abruptly doubled in price, upending an informal sector that is central to the region's economic activity. Since Nigeria scrapped a state fuel subsidy on May 31st, black market fuel vendors and commercial drivers in Cameroon, Benin and Togo who were heavily reliant on petrol smuggled from Nigeria have seen the businesses collapse. With supplies dwindling, queues have been forming at official petrol stations, where fuel is now competitively priced.
Moving on to the top news in the energy sector.
Indonesia plans to raise its mandatory palm oil-based biodiesel blending to 40% in the next few years, but for now will keep it unchanged at 35%. The country's energy minister said on Monday. The world's biggest palm oil producer raised mandatory blending from 30% to 35% in February, however it has not been fully implemented in some areas. Right now we stay with B35, and then we do preparation for B40. When we feel it is ready, then we launch, Indonesian Energy Minister Arifin Tasrif told Reuters in an interview on the sidelines of the Energy Asia conference on Monday.
The extraordinary events in Russia this weekend made for dramatic headlines and the ramifications are likely far from over, but the immediate impact on global crude oil markets is likely to be limited. The upshot of the events over the past few days is that Russian President Vladimir Putin has survived a threat to his rule from the mercenary group Wagner, but his grip on power and his image as a strongman have been damaged. A deal mediated by Belarusian President Alexander Lukashenko, a key Putin ally, will see Wagner boss Yevgeny Prigozhin move to Belarus and his Wagner fighters end their mutiny in exchange for the dropping of charges against them. Next, we have the top news in metal markets. Gold prices on Monday firmed above last session's more than 3-month low, as concerns surrounding the political turmoil in Russia drove flows into safe haven bullion, outweighing risks from the Federal Reserve's hawkish outlook. Spot gold was up 0.3% at $1,927.11 per ounce by 11:53 a.m. Eastern Daylight Saving Time, 15:53 GMT, while gold futures gained 0.4% to $1,937.40. We are seeing some modest safe haven demand in gold on the Russian incursion that was quickly aborted over the weekend. But there are still some underlying worries, said Jim Wyckoff, senior analyst at Kitco.
The premium for copper for nearby delivery on the London Metal Exchange over the 3-month contract has jumped to a 7-month peak due to a decline in stocks available to the market in LME-registered warehouses. The premium, or backwardation, for cash copper over the 3-month contract climbed to $18.74 a metric ton at the market close on Friday, its highest since November 2022. That compared to a discount or contango of $28.50 2 weeks ago. On warrant, copper stocks in LME warehouses have fallen to the lowest levels since October 2021 after large amounts of inventory were earmarked to leave the LME system.
We will now look at the top news in the agricultural sector.
Russian wheat export prices rose for the 2nd week in a row last week along with global markets, while the pace of exports also accelerated, analysts said. The price of Russia's new wheat crop with 12.5% protein content, delivered free on board, FOB, from the Black Sea in July, was assessed at the end of last week at $231 a ton compared to $228 a ton the previous week by the IKAR Agriculture Consultancy. On Monday, the forwards for the new crop were already seen as higher, about $235 a ton, said Dmitry Ryuko, head of the agency. That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.